Hello and welcome back, everybody, to another live stream. So it is Tuesday, the 25th of June. And yeah, of course, we are going to go through the technical analysis on Bitcoin. Of course, we will go through anything else you guys want to go through. I will be more than happy to answer any questions that you are wanting me to answer. And yeah, of course, we will also go through anything that you want me to go through as well. Yeah, you have me for 50 to 60 minutes. So yeah, ask me anything, of course, if you do have anything that you want to ask. But yeah, before we get into this, please make sure that you smash that thumbs up button. Subscribe, of course, if you are new to the channel, and turn that bell notification on so that you never ever miss another live stream like this. And yeah, I guess we will jump straight on into the analysis, right? I am feeling like I'm about to sneeze here, so yeah, you might have to just give me two seconds. Is it going to go? I think it's going. Yeah, hay fever at the moment here in the UK is pretty horrible, and I am suffering with it. Let's say, yeah, I am suffering with it. So, yeah, you might just have to bear with me a little bit. But yeah, again, smash that thumbs up button, and we will jump straight on into the analysis. Right. So, let me just make sure everything is good. Okay, it all looks to be okay. We'll leave that there. So yeah, at this moment in time, right, I am currently long on the price of Bitcoin. I am long on the price of Bitcoin. I entered into this long trade with the team this morning in the daily market update. So yeah, in the daily market updates that I do for the team every morning, yeah, I was telling the team here, I'm taking a long, okay. I like this setup, right? And it's not necessarily a long trade that I'm looking to take all the way back up to all-time high. It's kind of just like a long trade that I'm expecting to possibly come back up to maybe like the $64,000 area. Where from there, right? You know, I'll be looking at taking profit off of the long trade, okay? Because for me, I do still think that we will see lower within Bitcoin. I do still think we are going to see lower within Bitcoin. So yeah, I am preparing myself for that. But I just, you know, I saw this setup here and I thought, right, okay, this could be a nice little longer, maybe for like a 1 to 2 risk to reward ratio, taking it back up to yeah, let's pull it up here. Yeah, maybe just taking it up to like these highs here for like a little 1 to 2 possibly, maybe like 64,500, where from there we see a pullback and we come back down further. Of course, I am prepared as well to get stopped out of this. I do understand that price is looking very, very bearish at this moment in time. So yeah, I do want to yeah, of course, cover that as well and cover why I am bearish on the price of Bitcoin, right? But yeah, initially, right, we'll start off with what has kind of been happening, right? What has kind of been happening. For this, let's go into the order flow, okay? let's go on to the 1 hour, right? Let's go and have a look at the 1 hour. Okay, so initially, right, we've seen lots of shorts opening up, okay, on this like move down here. We are seeing lots of shorts opening up. Let's just stretch it so we can see it a little bit clearer, right? So initially, right here, we can see lots of like shorts opening up on this move down, but it's like on this recent move towards the downside here where we start to see that this move down is getting a little bit weak. Okay, this is where it's getting a little bit weak, right? Because we can see open interest is very obviously decreasing on this move down, which leads me to believe, right? Okay, we could possibly give this price action back. Okay, we could possibly give this price action back. We've given, almost half of it back. Okay, but I do still think, right, we could see a little bit more towards the upside before a bigger move down. Okay, I do still think that is a possibility. But yeah, initially, this move down has been actually really good, to be honest with you. It has been like a pretty strong move down. You can see ever since the move started from up here, open interest has just been increasing over time. So we know that new shorts are coming into the market. But then we've seen this big decrease in open interest on this move down, which is telling us, right? And this is like a level that I like to look for when entering into a trade, right? We're seeing lots of longs getting liquidated, right? We're seeing lots of longs getting liquidated. So we can see all the longs that are long from, back here. Okay, their stop losses are being tapped. Whether they move their stop loss to entry or whether they just have the stop loss below the low or below these series of lows that we can see back here as well. Okay, what we can see here is, of course, that these long trades, okay, are actually getting stopped out. Okay, they are exiting. They are exiting their trades. Okay, money is flowing out of the market, which is why open interest is initially decreasing. And for me, right, because price has failed to move lower, right? We can go back here and we can just have a look, like how many long trades have actually, opened up here, right? We do have like a fair few long trades that have opened up back here. And for me, I'm looking at this and thinking, right, okay, we're getting a lot of long trades that are being stopped out, right? We can visually see it here as well, right? We have 60 million, okay, 60 million long trades getting stopped out here. Okay, so we have 60 million in this candle here. I know that these are longs getting stopped out because we're seeing open interest decrease. Okay, we can also see here 19 million are getting stopped out, 34 million are getting stopped out here, 50 million are getting stopped out. Okay, so all of these, right, and 55 back here. Okay, so we're seeing a lot of long trades getting stopped out on this move down. Okay, a lot of long trades getting stopped out. These are long trades that have longed this whole move that we've had towards the upside here. Okay, long this whole move towards the upside, right? And possibly even, been longing this move down. Okay. And how I see this is that, okay, we're getting a significant amount of long trades getting stopped out. Okay, long trades closing, money leaving the market. Okay, and these trades are covering, they're selling back into the market, right? Because of course, when longs, okay, open up, what are they doing? Well, they're buying into the market. But when those longs close, okay, they have to sell back into that market, right? And to be honest with you, we're seeing a lot of this happen at the lows, right? You can see here 34 million and 50 million at the lows. Okay, these are longs getting stopped out at the exact low. Okay, at the exact low. And that is a lot, right? That is quite a lot. 50 million, 34 million, that's quite a lot, especially in like the market environment that we are in right now. Okay, yes, okay, it's not as high as it has been previously. Sometimes we're seeing like 100 million, okay, delta, whether that be negative or positive, depending on prices pulling back or prices rising. Okay, but we've seen like 100 million here, but in the current market conditions, okay, we're not really looking at 100 million positive or negative delta, right? We're seeing like 60 million is a lot, okay, of negative delta at this moment in time. 50 million is a lot of negative delta. 55 million is a lot of negative delta at this moment in time. So for me, looking at this is a lot, okay? This is a lot. And this is what can move markets, right? This can move markets, right? And what we're looking at is as these long trades are closing, okay, they're getting stopped out, they're closing, they're getting liquidated, whatever it may be, okay, we would expect, right, these, because what do we have here, right? We have 84 million, right? We have 84 million shorts coming in, right? Pretty much, okay, because we're seeing these longs close, right? So 84 million negative delta, right? So these are 84 million like sells in the market, okay, and you would expect, right, off of this, you would expect price to just absolutely get obliterated, coming all the way down, seeing this huge move down, right? But that's not what we've seen, right? We've actually seen a little rise towards the upside. And for me, looking at this, right, I understand, okay, right, we are at a fairly major level, right? If we take a look at trading view again, okay, we can see that yes, we are at this level here. You know, it's a key pivot point, right? It's a key pivot point at $60,102, right? So it is a very key pivot point. And what I am, you know, looking at this level and what's going through my mind at this level is that, right, okay, if we're seeing loads of longs like selling into the market, okay, because of course they're covering, right? And we're seeing like 84 million negative delta. You would expect price to come lower, but it's not, right? It's not. And this is where I think, right, okay, there's a big institution here, there's a big trader here, there's big players here who are actually absorbing all of this, all of this like selling into the market, right? All of this selling into the market is being absorbed by somebody, whether that's an institution, right? Whether that's a big trader or a series of big traders, okay? What we know is that it is being absorbed because we have seen a swing failure pattern of this low and we're starting to see price actually rise, okay? And, you know, you could be waiting for confirmation, right? You could be waiting for confirmation of like a market structure change and amongst other things. But for me, you're entering into a trade a little bit late, right? And when you're waiting for too much confirmation, okay, that's when your risk increases and your reward actually decreases. So for me, right, I am looking at trying to trade like an institution, right? I like to get in the mindset of a retail trader and understand what retail traders are doing, but I will never ever trade like a retail trader. I will always try and trade like an institution, okay? Because we understand institutions have been around for a very, very long time, and they are going to be around for however long in the future, but a very long time in the future, okay? And institutions are the people that, you know, they're the only people that really make the money in the markets, okay? So you want to be buying or longing when the institutions are buying and longing, okay? Or you want to be selling when the institutions are selling and the institutions are shorting, right? So here I understand, okay, there is absorption happening here by a big player, right? Big player, that indicates, okay, institution, big whale, okay, big traders, okay, people that really know what they're doing, okay, are absorbing this price here. And yeah, when they're absorbing all of that, okay, what we have to understand is that price does actually tend to rise off of that, okay? And amongst that, okay, we do have, of course, this weak move towards the downside. It is a weak move. And when we get a weak move towards the downside, we do tend to see that price actually rise back up. Okay, that's what we initially do see, right? And again, okay, if we go and take a look at the order flow, we do actually have a lot of shorts coming in who were, okay, and who, you know, a fair few of them are still in a profit, okay? But what we can have a look at here, where are we? Let's just find where I am looking at. Let's go on to the 8 hour, right? Here, right, this is where we're looking at, okay? So here we can actually see a lot of shorts opening up in this candle here. Open interest was increasing, right, on this yeah, very slight increase, okay? But initially it's increasing, right? So we understand there are a lot of short trades that have actually opened up in here, okay? And we can visibly see it as well, right? And you can see here, 22 million short trades opened up at $61,035. Okay, well, between $61,035 and $61,055. Okay, because we're on tick size 30, right? So 22 million short trades opened up there, right? And as you can see, 22 million short trades were actually in a profit, okay, but now they are underwater, okay? So those 22 million short trades that opened up here, right, now they're underwater. Now they're emotional. Now, okay, they are looking to get out of their short trade, okay? By doing so, what do they have to do? Well, they have to buy back into the market, right? And buying back into the market would initially push that price higher. So it's kind of like a domino effect, right? And it's what happens, okay, is as price starts to rise, more and more and more and more shorts become underwater, okay, and it's a domino effect. So you go a tick up, okay, more shorts are underwater, and that's going to create more people to buy back into the market because they have to cover from their short trades, okay? And it's like a domino effect, and it just goes up and up and up, and it's vice versa when you're looking at price actually coming down as well, and then longs are getting liquidated or longs are getting wrecked, right? So it works in both ways, right? It works in both ways, but how we're looking at it right now is that lots of shorts opened up, okay, and they are going to have to cover at some point. So as price starts to rise, okay, they are adding fuel to the fire and pushing that price higher. Okay, so that's kind of what I'm looking at. That's kind of what the basis of this short trade is off of. Okay, and this is what I try and like preach here. Okay, and teach everybody here is just do not give into FOMO. Don't trade like a retail trader. I understand that we are retail traders, yes, but we don't want to trade like the retail traders. We want to buy, okay, or long where the institutions are buying and longing, right? Because we know that they are the people that make the money in the markets, okay? We know that they've been around for a very long time because they know what they're doing, okay? And they can move markets, right? So we want to be trading where they are trading, okay? And a really just like a really big thing within trading, for me anyway, is looking for absorption, right? Because when we see absorption, then we know, right? Then we know that the institutions are there. The institutions are buying or the institutions are selling, right? We can figure it out. There's nothing out there that is directly telling us, and I wish there were, but it doesn't really work like that because, of course, institutions don't really want you to know where they're buying, okay? Or big traders don't want you to know where they are buying, right? But we have the tools to figure it out. Again, there isn't something that is telling us where they're buying, okay, or where they've bought or where they're looking to sell, okay? There's nothing out there like that, but we can grasp a good understanding of where they are buying and where they are selling as well. And that's literally just by looking at the order flow, right? Order flow is really great for looking for absorption, right? Absorption into levels. That is like the secret ingredient to trading, and that was kind of like the secret ingredient that I established that really helped me understand how these markets actually work. If you're not looking for absorption, right, you don't understand how the markets work, right? You do not understand how markets move and what moves markets, okay? It's a lot of retail traders are they and they don't understand it, okay? A lot of people don't understand it, but it is mainly the retail traders that actually move the markets, right? The institutions just take advantage of it, okay? They let the retail traders do their thing, okay? They place their limit orders, right, at the levels that they know the retail traders are going to be too aggressively short or too aggressively long, okay? And they take advantage of that. That's exactly what happened here, right? They understood that as price is coming into this level, what are they going to be expecting, right? They're going to be expecting this low to be taken out here, right? And it's not to say that this low won't be taken out. Okay, it's not to say that, but okay, we saw it back here, right? We did actually see it back here where we didn't actually take out the high, so we could see that here, right? I still think there's a possibility that we could come back down. Okay, I'm just trying to take a little bit of a hedged long here. Okay, at this moment in time, it is currently working out $500 in a profit, as you can see down here. So at the moment, it is kind of working out for me, right? But I understand that, yes, okay, I would still like this low to be taken, right? But going back to what I was saying, what the institutions are viewing, okay, is that price is having a pretty swift move down, okay, a pretty direct move down. When I mean direct, it's just going down. There's no real resistance, okay? And when you see something like this, okay, this is where shorts, okay, retail traders just aggressively short for no reason whatsoever, right? They FOMO, okay, because they're really scared. Maybe they're scared because their hodl portfolio is going down. Maybe they're scared because they longed up here, okay, they got stopped out, right? And now they're like, oh no, price is dumping, I need to short, okay, because they feel like they've missed out on the trade, so they're FOMOing into the short. This is what the institutions are looking at, okay? They're looking at these retail traders when the retail traders are just blatantly being stupid, okay? And then once price gets to a level where they're looking to long, okay, i.e. the institutions, okay, what happens is they place their limit order there. Price actually starts to break below that, okay, of course they're not worried, right? They're not worried because they know what's going to happen, okay? Of course, it's not going to work out 100% of the time for them, but the majority of the time it works for them. It works for them in their favor, right? And as price is coming in and they understand, okay, everybody, right, that was long back here is actually having to sell back into the market because they're having to cover, but also we're seeing a lot of shorts coming in as well, right? And all of that selling pressure that's coming into the market, okay, is now being absorbed by their big limit order, okay? And initially, right, the short trade, the retail traders who are shorting, okay, and also the longs that are all getting stopped out, okay, they get exhausted, right? They've shorted as much as they can. They've sold back into the market. You know, they've wiped out all of the long trades, right? The shorts are now getting exhausted by, okay, that institution who is just absorbing all of that, okay? And then that's when we start to see the price rise, okay? So this whole thing, right, is actually initiated by the retail traders, okay? But then, of course, right, big players, big institutions, they're absorbing all of it, okay, at a level of interest for them. And then, right, the price starts to reverse in the opposite direction, okay? Back here was like a really good example of where because here, what we're kind of focusing on here is absorption. Sorry, of course, absorption, yes, but we're kind of focusing on long trades here getting stopped out. Okay, this is kind of what we're focusing on this move down. Long trades getting stopped out. However, on this move up here, we weren't actually seeing short trades being stopped out. We were seeing longs opening up and a lot of long trades. We were seeing like 75, 79 million long trades opening up at the high here. Okay, and on this move up, and then right, we started to see price pull back. Okay, so this was actually initiated again by retail traders. Okay, because retail traders are longing the high, expecting all-time high. Okay, however, price is starting to pull back. Of course, there's going to be a big player, a big institutional player here, okay, a big trader here who is absorbing, absorbing a lot of the longs, okay, and pushing that price lower, right? But they can only absorb so much, right? And then what happens, okay, is that absorption of the longs, okay, is too much, right? The longs get exhausted, right? And then what happens, okay? Price starts to pull back a little bit. But as that price starts to pull back, the retail traders, without knowing it, okay, are actually causing the dump, okay, because they've longed the high and they are now getting out of their long trades and they're now selling into the market, adding fuel to the fire, pushing the price lower. Right. So what retail traders don't actually understand is that they are the ones that are actually kind of destroying themselves, right? By actually entering into a long trade at resistance initially. Okay, you're entering into a long trade on a breakout, right? At resistance, okay, because you're FOMOing into a long, you're expecting all-time high, right? This is why I always say, right? I always say, I long a pullback and I will short a rise. Okay, that's why I'm always looking for long trades as price is pulling back, and a short trade when price is rising, right? Because we understand the majority of the market is expecting all-time high here. If the majority of the market is expecting all-time high, I have to say it's probably not going to happen, right? And you want to be on the opposite side of the market. You want to be the 5%, the 1%, whatever it may be, that small percentage, okay, who is not FOMOing. Okay, that's where you want to be in the market. You do not want to be doing what the majority of the market are doing. Okay, because the institutions are looking to, of course, take advantage of what the majority of the market is doing. Okay, that's what they want to do, right? They want to take advantage of it. And of course, institutions, they do play a part in it, right? They do play a part because they kind of start the reversal, right? They start the reversal, but the retail traders have initially, caused it because they are the ones longing at stupid prices or shorting at stupid prices like this one here, right? Remember, I took the long trade from down here as well. Okay, why did I take the long trade from down there? Because we saw aggressive shorting coming down here, FOMO. Okay, and what do we know, right? We're coming into a big level, right? We know that institutions are going to be looking to absorb all of this, and then all the institutions are doing, right, is relying on the long trades that opened up here or the short trades that opened up here to cover, right? When they cover, right, they're selling into the market or they're buying into the market, right? So the institutions, all they're doing is just trying to push the button, right? They're trying to push that button, okay, get people to get a little bit scared, okay? They're just trying to absorb all of that pressure, okay, and they're trying to cause something, right? And once they get it right, once they just just take out that they just take out those first bit of long trades here, okay, then it's all up to the retail traders. And again, down here they take out just those first bit of of course it's got to be like a high negative delta area, okay, but they're looking to just take out that first little tick, okay, of where the shorts are, right? And once that's happened, okay, it's kind of left to the retail traders to move the market, right? It's kind of left to the retail traders because once the shorts start to cover, they start to buy back into the market, right? Then the rest of them that are higher up, okay, are going to do the same as well, okay, and it's just that domino effect, right? So yes, the institutions, right, they do play a part in it, right? But the main reason why the market moves is due to retail traders, okay? And this is what retail traders don't understand. They don't understand that they are the ones actually moving the markets, right? You can say, yes, institutions are manipulating the market, right? Okay, but everybody's in this market on their own, okay? Everybody is in this market to make something for themselves, okay? They're not worrying about the next person, okay? They're not, I guarantee you now, nobody in this market gives a damn about anybody else in the market, right? Of course, maybe you've got a friend in the market. Yeah, maybe okay, you do, of course, feel bad for him if he does lose some money. Okay, but again, everybody is in this market for themselves. Everybody is in this market to profit for themselves, and that's exactly what the institutions are doing. Okay, and of course, they do have that capital. They do have the ability to kind of manipulate the market slightly. Okay, where they're just pushing the buttons of the retail traders and okay, right, I'm absorbing all of your shorts. I'm absorbing all of your shorts. Okay, are you gonna get out of your trade? Are you gonna buy back into the market? Okay, and then once the first ones do, the rest of them follow, right? Because as that first lot of short trades buy back into the market, it pushes the price higher, and then the lot above them, okay, a tick above them, okay, they're doing the same thing, right? They're covering, right? They're buying back into the market, and then it's left to the people above, and it's just like a domino effect, and then it just all these shorts get completely wiped out, and then the vice versa, all the shongs, the longs get wiped out, okay, on the move down, okay. So again, right, I just want to make it very clear, right? It's mainly the retail traders that move the market, but they don't understand it. Of course, institutions are like that catalyst pushing the button, okay. But initially, it is the retail traders that are actually moving that market. Okay, I understand here. We have a lot of retail traders who are now underwater. Right, a lot of retail traders who shorted the low, okay, on and are now underwater. And as price starts to rise, it's just going to take out those shorts, and probably come higher. Right, that's kind of what I'm looking for. Right, do I think price is bullish? Not really. Okay, I think this is very bearish up here. Okay, of course, in the grand scheme of things, right, it's not. It depends how you look at it, really. But at this moment in time, I'm not incredibly worried. I'm not incredibly worried whatsoever. When I get incredibly worried, it's kind of like a break below $56,400. And I mean a break of the level, not a fake out of the level, a clean break of the level. That's when I get a little bit worried, and I'm thinking, okay, right, $43,000 could be pretty likely here. Yeah, here's the range that we're looking at, right? That's where I'm looking at, like $42,000, okay, $42,000, because again, I talk. If this was on a smaller time frame, if what we're seeing here is on a smaller time frame, I would have shorted up here. I did actually short up here, okay, but I didn't short off of this chart here, off of this weekly chart. I shorted off of a smaller time frame trade setup, okay. But initially, if this was on a smaller time frame, this would have been a perfect short entry from up here with the stop loss above the high. Okay, and it would be in some really nice profits as of right now. So for me, looking at this, yes, this is bearish, right? But I don't consider this to be like something to really worry about until we start to lose $56,400. If we start to lose that, then I'm thinking, okay, right, what we saw back here, okay, in 2021 is most likely going to happen, right? Because if we're having a look at this, right, you can see this top here and you can see this top here. They look pretty similar, right? They're not identical, but they look pretty similar. Okay, they do look pretty similar. So I wouldn't be surprised if we saw a big pullback here, and then we got another move back up, possibly taking us up to like $80,000. Right, I wouldn't be surprised there. And then of course that be the end of the bull market, and then we have another bear market. That's something like I wouldn't be opposed to that, and I wouldn't be surprised if I were to see that whatsoever. But at this moment in time, of course, I am just focusing on what is going on here. If we start to lose that $56,400 level, that's when I say worried. Okay, I'm not going to be worried about it because I'll most likely be shorting it. I have also prepared myself for a big move down because up here on my hodl portfolio, I've taken quite a lot of profits out of the hodl portfolio that I have built up all the way down here at, below $20,000. Again, like I said in yesterday's live stream, I bought the most amount of Bitcoin I ever bought at $16,000. Right? And I got into Bitcoin when it was like $6,000. So yeah, that was, for me, of course, it wasn't in the grand scheme of things, but for me, $6,000 was cheap. Okay, but again, coming to where we are now, I have more capital. I have the ability to be able to buy more Bitcoin, fortunately, okay, because I have done quite well in the bull market. In the previous bull market, right? So when we did have the bear market and we came down to the lows, okay, and of course you understand if you watched yesterday's live stream why I bought so much Bitcoin, okay. Just based off of this chart here, right? Based off of this chart is why I entered into, the biggest, like long, you say long trade, but it was like a buy trade, right? Because we came down to the CVDD floor, and I'm not one to I'm not one to be looking at like one single indicator, but this has just worked so well over the years, right? I won't go into detail about it like I did yesterday, because yeah, like I said, I went into it yesterday. But just look how many times, right, the CVDD floor has predicted the bottom of the bear market. All right, look how many times. Yes, it's not perfect, but it's pretty bloody close, right? It's pretty bloody close. It's done it 4 times, right? 4 times, okay, as you can see here. So every time we come down here, for me, that's just a huge buying opportunity. And that's exactly why I bought the most amount of Bitcoin I ever bought at $16,000, right? $16,000 is when I actually had a limit order set there, okay, just above that CVDD floor as price was pulling back into it. And yeah, again, I bought the most amount of Bitcoin. I actually bought it. It was actually here, okay, that I bought in, and then we had another move down, and then of course, you have that little bit of fear inside you where you're like, oh, is this going to continue to work? Fortunately, it did, okay, and then as you can see, but again, $16,000 buying Bitcoin at $16,000. Who wouldn't want to buy Bitcoin at $16,000? Yeah, absolutely amazing opportunity. So yeah, of course, if you want like a detailed view of that I did that in yesterday's live stream. So take a look at that. But yeah, um, that's kind of the analysis on the market at this moment in time. If we lose $56,400, that's when I get worried. I can just see. Let me pull the chat up. I can see a comment has come in. Logic Mindset. Good to see you here. I don't believe I've ever seen you here before, so it is good to see new faces here. Thank you very much for tuning in. Make sure you smash that thumbs up and subscribe, of course, if you are new. What have you said? Hello. Are you doing any scalping? Personally, for me, I am not a scalp trader. I'm not a scalp trader. I'm more of like a swing/day trader. I prefer to swing trade, but for the sake of what I do here for you guys, I do like look to day trade every now and then as well, because I understand if I'm looking at just swing trading, I'm entering into one trade maybe a week, maybe not even that. Maybe it could be one trade every 2 weeks, right? So yeah, of course, for the basis of what I'm doing here, I do try and look at entering into day trades as well. But no, I don't do. I'm not a scalp trader. I did do it for a while, but for me, I was having to be stuck behind the computer all day, just all day, every day. And how I see it is that I can make the same amount of money swing trading than scalp trading, and day trading rather than scalp trading, right? Um, I just prefer it, right? I can set my alerts. I can come to the computer when the alerts are set off. Okay, and I can trade based off of the reaction that I see at that level. If I like it, I will take the trade. If I don't like it, I won't wait. I won't take the trade, and I'll look for the next trade. And then I can relax, right? I put my trade in. Okay, if the setup is there, I put the trade in, move the stop loss, put the stop loss wherever I need to put it. Okay, and yeah, I just sit back and I relax. Okay, and I let it do its thing. So yeah, for me, I do just prefer that. But yeah, I am day trading here as well, because of course, I understand that the team on the Discord as well, they do want me to put day trades in as well. So yeah, that's kind of what I do as well. Damien, good to see you back. Work smarter, not harder. Exactly. Yeah, exactly. Work smarter, not harder. Yeah, I mean, there are a lot of people out there who do scalp trading, and I personally know a couple people who are scalp traders. But yeah, it's just it's all personal preference. It is all literally all personal preference. I would rather set my alerts, come to the computer when I am needed, and yeah, just trade when I'm needed, right? And then I can do whatever I want with the rest of my time. So yeah, that's exactly it, right? It gives me a lot more. I feel it gives me a lot more freedom as well. I always find when I was scalp trading, it was much more stressful. It was much more stressful because you're not looking for the highest probability trades. You're looking for Of course, you're looking for high probability trades, but you're not looking for the highest probability trades. And it's yeah, for me, I understand where the higher probability trades are, and the higher probability trades are where the institutions are trading, and of course, the institutions do not scalp trade. Right, the institutions do not scalp trade. They are, long term, buyers or sellers, whatever they're looking to do. Right. So yeah, of course, if you've got any questions, please put them below. You can't buy freedom. Enjoy the weather outside whilst it lasts. Swing trading is the best for stress and time management. Exactly. Yeah. Exactly. I couldn't have said it any more perfect than that. Especially at the moment in the UK, we do have beautiful weather at the moment, coming into the summer, and we don't get that a lot. We do not get that a lot. But yeah, I couldn't have put it any more perfect. Um, yeah, a lot. It's a lot less stressful. It is a lot less stressful, and yeah, yeah, it's just good. Yeah, I don't know how else to say it. Right? It's just what I prefer. Yeah, it does give me the opportunity to do what I want. When I'm on holiday as well. It's nice to just kind of like relax, right? Of course, I do work. I do consider that I do work, like 365 days of the year. Right? I do that, right? I do look at the charts pretty much every single day. But it's not necessarily I'm sitting at the computer for hours on end and trading. That's kind of not what it is. I look at the charts every day. I do not sit there and analyze the charts for hours on end every single day, right? My morning routine is, I'll get up, and it's probably a bad habit, right? But the first thing I will do is I will open up my phone and just check where price is. That's all I'll do. I'll turn my phone off, or not turn it off, but I'll put it away, okay, and just get on with the rest of my morning routine, right? And then I'll come and sit at the computer. Again, I'll look at the price, and if anything's moved, if we've come into like a key level, I'll just quickly check the order flow, check what's going on, okay, and I can get on with the day, really. And it's, for what I do here as well, and this is like the biggest thing where I think if you're getting into trading, swing trading is the best thing to do, because you're not going to be able to instantly become a profitable trader where you can quit your job and you can make money trading. It doesn't work like that. It's taken me like 4 years to get to where I am now. It took me 2 and a bit years to actually become a profitable trader. 2 and a bit years, that is quite a long time, right? 2 and a bit years. I could have gone to university, in that time, right? University here in the UK, wherever you are, it's like 3 years, okay? Almost 3 years, because you have a lot of holiday at uni. But yeah, initially it is like 3 years, because you have um, yeah, 3 years basically. So yeah, it was like university to get to this point. So it does take a lot of time, and I mean, I was working a job when I first started this. And when I did finally have the ability to quit my job and not need to work anymore, that's when I did attempt to scalp trade, right? I did attempt to scalp trade, but what you have to understand as well, it is a completely different game. It is a completely different game. You can't really use the same strategies. You can to an extent, but you have to modify them slightly, because you understand that institutions are not scalp trading, right? So you're not going off of what institutions are doing. Whereas what I do here, okay, is I'm looking to long, I'm looking to short where the institutions are longing and shorting. But when you're scalp trading, you're not looking for that, right? You're looking for, it's more of like momentum trading, I'd say. It is kind of more momentum trading. Um, and yeah, you kind of want to be going with the momentum. Like if you're scalp trading on this move down here, right? You acknowledge, okay, right? We are in bearish market structure. Okay, I'm going to be looking for short trades. So scalp traders won't really be looking for long trades in here, right? You're looking for short trades. But yeah, for me, I've tried it. It's stressful. I was working a job when I first got into trading, so for me, swing trading was the only possibility. I heard some arguments you should scalp to absorb as much information as possible and build a strategy. You basically get overloaded with information, so then swing trading becomes even easier. I've never heard of that before, but yeah, I mean that could be, yeah, that could be very valid. To be honest with you, yeah, I can't really disagree with that. Yeah, you're overloaded with a lot of information. That is a yeah a valid comment, to be honest with you, and a valid argument. The only slight thing I have an issue with is that scalp trading is a little bit different to swing trading. You're not really looking at the same setups. That's the only little issue with it. But it's not two different languages. Yeah, it's not two different languages whatsoever. You're still looking at the same tools and the same things, but yeah, you do have to modify it slightly. So yeah, again, it's not the same. It's not different languages. It's still the same language. Yeah, doing it in that term, right? But it's still the same language. But I found it was just a little bit different. It was just a little bit different. But yeah, 100%, right? You're if you're scalp trading, you are looking at the charts more, first of all, but you are also yeah, overloaded with trades, right? Scalp traders, um, there's like 40 trades a day. There's like 40 trades a day when you're scalp trading, or 40 possible trade setups when you're scalp trading. Um, so yeah, that's very true. Let's just uh, yeah, let's just have like a little look at this then. Say you're looking right, so I can see here, of course, right, I can see what's happened in price, so I know that price has gone down here. But I can see here, right, price has come up. It's failed auction this high here, right? And we could have a look at this. So what time is this? So this is so this was yesterday at 3:05, 3:10. Okay. So let's have a look at this. What was happening here? Yeah, I mean, this is kind of similar. Thing is, I just haven't done a big thing that I believe in trading that you should do is you should back test. You should build statistics. So I haven't built statistics on this um, for scalp trading. But this is kind of like a trade setup that I would look at, right? You have a nice pivot high. You've taken it out with a failed auction, right? You've got lots of longs opening up at the high here. Okay, you can see pretty much 2 million there. You've got 2.5 million there. So you've got 4.5 million. Okay, then you've got 3.3 there. So you have 7.8 million. Yeah, right. Let's say 7.8 million long trades coming in there, right? What happens? 7.8 million long trades are underwater. Okay, you then start see shorts coming in, and then yeah, as you can see, we see price pull back there. Um, So yeah, that's kind of that's a big setup that I would look for on a larger time frame. But yeah, you can see there it's kind of still valid, right? It is still valid on a smaller time frame. It's just not personally how I um, how I would trade, to be honest with you. But I do give scalp traders a lot of credit because yeah, it is very stressful. If you can process information quickly, understand higher pressure situations, then you should be able to create a bigger plan on swing trading. Yeah, yeah. I mean, definitely. I do not disagree with that whatsoever. Yeah, I think how I view life is, I think throwing yourself in the deep end is always the best thing to do. And yeah, I guess that is just throwing yourself into the deep end, high pressure situations. Yeah, that is throwing yourself in the deep end. And I always throw myself in the deep end because I do think that that is the best way to go about it. Right? You really understand what it's all about. So yeah, definitely, I can agree with that there. But yeah, going back to what I said earlier, it's literally just personal preference, right? It is personal preference. But I always believe that throwing yourself in the deep end is good. I think that's the quickest way that you learn, right? Throwing yourself in the deep end. I'd say, with everything I do in life, I throw myself in the deep end, and trading was a big part, a big one where I threw myself in the deep end and just went all at it. Because I first got into it in COVID. I got let go from my job because of the pandemic, of course. And I had no way of making any money, right? I couldn't get a new job because no one was hiring. So it was kind of like, right, what can I do? I had some savings, okay, and I just kind of like threw it into trading. And yeah, I have to admit, I lost it all. I did lose it all, and yeah, it was a big like oh shit moment for me. Um, what am I going to do now? Right, I've got nothing. So yeah, that's kind of like where I threw myself in the deep end. But it was also like because of that, I had that like determination to make it back and more and actually become good at this. Because how I saw it is that if I can lose all of that money, I could probably also make all of that money as well. That's how I viewed it when I was getting into it. "Oh, I've lost all of this money. I must be able to make that much money. If I can lose that much money, I must be able to make that much money." And it's very, very simple. Like, this is something that I advise everybody to do. This is, of course, not financial like advice because it's not financial advice. It's not financial advice whatsoever. But grab a coin, okay? I like to do this, and when I'm having, when I ever have like a difficult moment in the markets, right? Because I do, right? I do have periods where I really doubt myself. I don't let it affect my trading. I don't let the emotional side of things like affect my trading. But there's sometimes where maybe I'll take two losses in a row, maybe three losses in a row, okay? And I will think to myself, right, this not going to work anymore? Is this it? Is it over? And it can like mentally play on your mind, right? But a very, very good thing to do, okay, is get a coin, okay, get a coin, or go onto your computer and just type in coin flip. And I'm pretty sure Google has it, right? Let's do it here. Let's do it here. That would be a fun little game, to be honest with you. coin flip. Right, we have a coin flip here. This is actually a really good thing to do. I just want to show you this because this is like, let's just get this off the screen for a minute. This is just like a really good way to go, a way to like view trading. I'm pretty sure. How did you get calculator? Right. Can I pull a calculator up here? Right. Can I not pull it onto there? Right. Let's do it. Let's do it this way then. Let's do it this way. Right. This is just a really good thing to do, right? So first of all, you need to have an edge in the market, right? You need to have an edge. You need to have a strategy that has at least a 50% win rate, at least a 50% win rate. Okay. That's what you need to start off with, right? At least 50%. Okay. And it's possible, right, to have a higher win rate than that as well. Okay. On average, I worked out my win rate. Okay. On average, my win rate, okay, recently has been 72.22%. Okay. So it's not anything crazy. It's not like 90%. It's not 100%. Right. But my win rate, okay, recently, because I like to do this sometimes, I like to just see what my win rate has been over a period of time. Okay. At this moment, I did it. It was like a week or two ago, and it was 72.22%. Okay. So I understand, okay, I have a strategy that is profitable, okay, and it is giving me above a 50% win rate, okay. But right, what we're looking at with this coin flip, okay, is that we are looking at it landing on heads every single time, right? So we are betting, okay, or not betting, we are predicting that it's going to land on heads every single time. Of course, it's not going to land on heads every single time, okay, but we have to say, right, there's a 50-50 chance of it either landing on tails or it landing on heads. Right? There's a 50-50 chance there, isn't there? Okay, so you've got a 50% win rate there. You have a 50% win rate. Now, with that 50% win rate, you need to have a risk to reward ratio of 2 to 1. Right? You haven't. So when, let's say we start off with $10. Okay, $10. So for every win that you take, you plus 2. Every loss that you take, okay, you minus 1. Right? That's what we're going to do. Right? So we're starting off with $10. Every time we win, okay, we land on heads. Okay, we're going to use heads. We get 2. Okay, we get $2. If we land on tails, we lose $1. Okay, so let's place, and let's do this 10 times. Right, let's do this 10 times. Okay, so we flip the coin. Right, what does it land on? It lands on tails. Right, so we minus 1. Okay, so it leaves us on 9. Okay, so that's 1. We have 2. Okay, we minus 1 again. Right, again. Right, 3 losses in a row here. Right, that's 3. 4 losses in a row. Right, this really isn't going well, is it? This really isn't going well. Okay, there we go. Right, so now we plus 2. Okay, was that 4? I think that was 4. I can't remember. Oh, that's annoying. I can't remember now. Let's call that 5. That's 6. That's 7. That's 8. Okay. That's 9. And that's 10. Right, so as you can see there, that right there is a profitable strategy. Okay, you have a 50% chance of winning. Okay, so you have a 50% win rate, a 50% win rate. Okay, of course your risk to reward is going to have to be 2-1, right? But that in itself is a profitable strategy. Okay, it is a profitable strategy. Of course, maybe it's not going to give you like amazing profits. Okay, but if you're doing that over an extensive period of time, then it is going to make you some really, really nice profits, right? So just like it's a really good game to play. Like, I advise you to do this. Like, do it 10 times, but let's call that a round, okay? And maybe do like 10 of them. So you do 10 sets of 10 rounds, okay? 10 sets of 10 rounds, and you just do that and just work out, okay? And you have to think to yourself, this is only having a 50% win rate. Having a strategy with a 50% win rate, okay, and a 1-to-2 risk to reward ratio, okay, is going to make you a profitable trader. Anything above that is going to make you an even more of a profitable trader, right? So it is just all about risk management, okay, having that strategy that will at least give you that above 50% win rate. Okay, that's all it is. And here, it's not, we've made $4, right? But it's $4 profit. Okay, you can't complain with that. It's almost, right? It's almost a 50% increase, right, on our initial investment, right? Because we invested $10 into it, right? So it's initially, right, almost a 50% increase on the account. Okay, so there, it's just like a perfect example of how, okay, if you have proper risk management, you have a strategy that will at least give you a win rate of above 50%, okay, then you are a profitable trader. That's just putting it in very, very simple terms, okay? And, if you had a robot to do that, like if you gave the robot a strategy that had a 50% win rate, maybe a 60% win rate, okay? If you gave that to a robot and you gave it $100, okay, and you let it do its thing for a whole year, by the end of that year, okay, that $100 will be much more than $100, okay, much more than $100. The issue with traders, right, the big issue with traders is their emotion, okay? You can see there at the start, right, at the start of me flipping that coin, right, where did we go from? Okay, we went from $10 all the way down to, was it $7 or $6? Okay, I can't remember now, but we went down to like $6-7. Okay, how many losses did we take in a row there? Like four losses in a row there. Okay, and that three, four losses in a row is where the majority of traders quit on their strategy and they change their strategy. That's where the majority of the traders quit on trading. Okay, if you can get through that tough time, right, you come out at the end of the tunnel, okay, on the other side, then honestly, right, you will absolutely obliterate that small little series of losses that you had there, right? It is all about getting that emotion out, having the proper risk management, having a strategy that gives you an above 50% win rate, and sticking with it, right? Taking every trade that you are presented, okay, and stick with it, right? If you get emotional, right, you do not let it affect your trades whatsoever. You can get emotional, but do not let it affect your trades, right? And honestly, if you can, it's easy to say. I understand it's easy to say, right? But it's very hard to implement. I understand that. I've been through that, right? But if you can get through that, honestly, it's as easy as I've just said there. It is, right? It's just that emotional stage, which is like really, really hard to get over. Okay, that's why the majority of the traders fail. So yeah, that's a really, really good game. Just like go and play that. Right, you can play it. You can play it with like just a normal coin as well. It doesn't have to be on the computer. Okay, but yeah, get yourself a calculator, or if you're good at maths, do it in your head. But yeah, and just play that game. Do like 10 sets. Like 10. 10 flips of the coin. Okay, for 10 sets, okay? Work it all out, do each set, okay? Work out how much profit there was on each at the end of each set, and then add it all up at the end. Or you could just do it continuously for like you could do like 100 flips of the coin and just do it that way, okay? However you want to do it, okay? Just do that, okay? And that will just like give you. It's a really good example because it will just give you a really good understanding of if you can get that 50% win rate, okay? And if you're targeting that 1 to 2 risk to reward ratio, okay, that's all you need, right? That is all you need, okay? You don't need anything above 50% if you can implement that, right? So yeah, let me know if there are any questions. We've been live for an hour and 5 minutes. Just wanted to give you that little bit of motivation there at the end, right? Because it's possible, right? It's possible. It's just that emotional aspect of it, which is very, very hard. I understand it. I've been through it. You're not alone, okay? But yeah, just use that as an example, and please try it for yourself. Like please try it for yourself. I want you guys to come back tomorrow after the live stream and tell me that you did it, okay? Because yeah, it's just such an amazing way to like really. It gives you like a good understanding of right. Okay, it gives you that confidence as well. I still do it till this day, right? When I'm bored, maybe I've had a losing streak of like 2 trades or 3 trades. I will just do that, and I think, right, it's okay, right? It's fine. I'm fine. I just get through this. I know that the good trades are coming. Okay, that's all it is. So yeah, I can't see any more comments coming in. So yeah, I'll probably leave it there. Been live for a little over an hour now. So yeah, thank you very much, everybody, for watching. It's good to see new faces here. Logic Mindset, good to see you here. Thank you very much for joining. Damien, it's always good to see you here. Always good to see you here. So thank you very much for joining. And yeah, putting some input into the chat as well. Yeah, you always put some really good input in. So thank you very much. I will, of course, see you guys tomorrow. Yeah, I will see you guys tomorrow. And of course, if you want access to the Discord, where I've got all my daily market updates. This morning, of course, that's when we entered into this long trade here. So if you want access to that, first link in the description. And yeah, of course, if you want access to the free Discord, that's the second link. Yeah, other than that, that's pretty much it. So yeah, thank you very much for joining, team, and I will see you tomorrow. And for any visionary members, I'll see you over in the Discord. So yeah, have a lovely rest of your